Let's go to Chris Conway. He's standing by from the Australian Stock Report in our Melbourne studio. Chris, welcome to the program. What should we make of the fact that we've seen the local market retreating today, even after that bumper session in the US?
Good afternoon, Nadine. I don't think there's too much to make of it. I think we simply failed at the recent multi-year highs up around 58.27, I think it was, if my memory serves me correctly. So that was the high from earlier in January. So we punched through that during the session. I think our high today was 32, and we've just rolled back in from that. Obviously, Telstra having a negative impact on broader sentiment as well. So I wouldn't make too much of it just from the fact that we failed for this session. I'm actually still quite bullish. As we approached those highs in January, I came out and said that I was bullish on the market and believed that 6,000 was a near-term to medium-term target. That was met with some scepticism, and obviously as the market retraced back into 5,600, it wasn't looking like a great prediction. But here we are again at those lofty peaks, and I think we punched through this time, and I think we carry up to 6,000 potentially probably before the end of the March quarter.
So what has to happen for the market to punch through 6,000 fundamentally? I mean, are we talking overseas implications from Trump's policies? Those have to, I guess, pan out as the market is hoping or anticipating. What else needs to happen?
Yeah, so basically, I mean, it's pretty simple. There has to be nothing that derails the momentum in the market. So I've said consistently over the past couple of weeks that I don't think our local earnings season that we're currently wading through will be negative. I think at worst it will be neutral, and in fact probably it will be positive. But in terms of the US market, yeah, I think there's a bit of a melt up going on in the US markets at the moment as opposed to a meltdown which might come later. But there's been a big shift in the US market from essentially worrying about the Trump trade being done to all of a sudden things being reinvigorated. And, obviously that's a huge market, and once momentum starts, it likely carries higher. So when the market, the Dow in particular, was trading sub 20,000, this is when I first had this inkling of there being a melt up. We're about 20,500 now. I think we get to 21,000, which would be about a 5% gain for US markets before, maybe people start to really question it. And I think, like I said, as long as nothing happens locally with our market in terms of reporting season, I think we get dragged higher in unison with US markets.
Okay, so then let's talk reporting season. We can start with some of the reports we've got through today. South 32, just getting some commentary coming from the company right now, saying that, look, commodity prices should remain quite volatile through 2017. But overall, I mean, you've got to say this is a great turnaround story for South 32.
I agree entirely, Nadine. It's a great turnaround story, and what I thought at a headline level, a great set of numbers today. So there was a beat of underlying earnings, 479 million, I think, versus consensus 390. They'll pay their first dividend since being spun out of BHP. But, and it is a big but, there was no upgrade to guidance, and by the company's own admission, really, it didn't come through, the big turnaround numbers didn't come through improvements in operational performance. Exactly. In fact, production was down across a number of their... So, look, as I left for the studio, the stock was down about 2.5% to 3%. I think that's what's weighing. The question is a really good one, and one that I think investors should be asking is, what happens next? They're sitting on about $860 million of cash. Their free cash flow is up. Why have they held back their dividend a little bit? I think some people were expecting 4 cents. They got 3.6. And maybe just to draw a comparison with Telstra, they've had this great cash flow generation, but they're not seemingly doing anything with it, and the operational performance from the company hasn't improved. In fact, in Telstra's case, it's gotten worse, hence why it's getting absolutely tailed up today. But that is the question. What do these companies do with this cash? It's a bit of a common theme going on with commodity companies that have reported. Of course, BHP, there was some disappointment there that they held back some of their dividend. So what is the market to read into this? Are there no quality assets to buy? Not perhaps because of the bouncing commodity prices. Do they not believe that the commodity prices that we've seen are sustainable? Perhaps. So I'd like to get some more clarity from South 32 about what they're going to do with that cash and how they're seeing things. And they didn't provide that today with their outlook. Basically, I read through every line of that, and they just said unchanged, 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 unchanged. Well, that's great. That's unchanged. What are you thinking though?
Yeah.
What do you think you're going to do with that money? So, Look,
yeah, and
that's
that's what investors. Sorry to interrupt, but that's what investors really want. They want outlook. They want detail and outlook. I mean, we know and we're comforted by what has come in the past, but especially a company that has really benefited from a change in the commodity cycle, you need to know what they see coming next. On that, we will be speaking with the CEO of South 32 on Tiki this evening at around 6 o'clock local time, Eastern time, I should say. So hopefully we'll get some of those questions answered when Tiki sits down with the CEO of South 32. I'd like to just move forward, though. Get your thoughts on Evolution Mining. Of course, again, a company that has benefited from, to a certain degree, commodities, gold in particular, but also, I mean, this is one of those classic companies in Australia that have used the opportunities handed to it to pay down debt. How do you rate its report card?
Look, I really like this. Again, a turnaround story. Their profit this time last year was, they made a loss, I should say, of around 16 million. Today was a record profit of 136 million. In the December quarter, they generated cash flow of 170 million. They paid down about $70 million of debt. Similar story to FMG. They're ahead of the curve in terms of paying down their debt. They're using strong commodity prices to tidy up their balance sheet. Their debt did hit a record of around 650 million in the December quarter, and they've quickly moved to pay down that debt. So I like what they're doing from that perspective. But this one, it's really all about, of course, the gold price, as you alluded to, Nadine. If the gold price remains elevated, they'll continue to do well. They'll continue to smash down that debt. Although it must be said, again, compare and contrast to, say, something like a South 32 operation done quite well.
Certainly so. Sydney Airport as well. I mean, we've had a lot of talk about some of these so-called bond proxies in this current environment, suffered greatly in the wake of Donald Trump's presidency. And still, though, when it comes to some of these companies, I mean, we saw it with Transurban, we can say it with Sydney Airport. Fundamentally, this is still an interesting business. Numbers are strong. Passenger numbers look good. Tourism inbound into Australia looking great. And of course, we're seeing the Australian dollar rising, which could potentially get more outbound tourism going as well. So fundamentally, how do you see Sydney Airport in light of its result today?
Nadine, the headline that I put on this morning, worth another look, question mark.
Okay.
You pretty much just stolen all of my talking points, but that's okay.
Great minds think alike.
Passenger numbers, they do indeed. Passenger numbers up 5.6%. Their profit was up, I think, circa 13% to 320 million. We all know the bond proxy story. We all know why a company like Sydney Airports has been smashed. But for me, what I took out of the numbers is they've controlled everything that they could control, and they've improved across the board. So what can you ask from a company? Eventually I think the market stops looking at this one as, a bond proxy that deserved to get smashed and has been smashed, and refocuses on what it is. It's a monopoly. It's a strong monopoly that is generating a mountain of profit at the moment. So I don't know where that tipping point is. If you would ask me where I think it would be a buy, look, I'd like to see it trade down to $5.50. At that point, I'd definitely be a buyer. I think sort of sub-6, around $5.75, I think it's worth, to answer the question, it is worth having another look at.
All right. Chris, great to talk with you. Thank you so much for joining us. Appreciate it.
Thanks, Nadine.
And we are going to continue to talk to Chris about that 6,000 call, possibly, he says, by the end of the March quarter. I think that's an interesting one to make a note of.